Well, everybody, got a special guest with me today, Lior Gantz. Have on several times over the last couple of years. He's deep into the economy and gold and silver, crypto as well, stock market, you name it. This guy is head deep in that stuff, and we thought it'd be a good time to catch back up with him, see what he's got to say about pretty much all the things I just mentioned. So, Lior, how's it been going, man?
Everything's fine. I'm I'm in Barcelona right now, enjoying the summer here in South Spain.
Cool. Yeah, I think you said earlier it was a little rainy.
Oh yeah, it was a big dump today of rain, very abnormal. But the rest of the time here was very pleasant and hot weather, good weather.
Yeah, I've got a little pond out front of my house that the rain's like, it's now above the pond. Now it's coming out into part of our yard a little bit. So it's like, all right, stop raining so much. But we go through these things in Florida where it's like, it's kind of drought. You got to watch your water use. Then all of a sudden we got more water than we know what to do with. So we one of the things we were just chatting about before we started recording, gold, silver, metals. We've had, I think you said, a 52-week low, which I've been following. It's definitely got hit by the monkey hammer recently. What are your thoughts on the metals?
Well, I think the most important thing to keep in mind with gold. Let's start with gold, right? Because silver is kind of different, but with gold. Yeah, but the thing with gold is gold is still a monetary metal to big institutions. So pension funds, hedge funds, etc. They still use gold as hedge versus geopolitical events or higher inflation than expected or anything that they traditionally hedge their portfolios against. So it could be political tensions, and could be deficits that are higher than expected, etc. Now, this puts a much more liquid market on gold than on silver. So that's one thing that's important to remember. The silver market is tiny, and it's mostly mom and pop investors outside of of all the industrial uses. So for monetary uses, investors that actually buy either a silver ETF or physical silver, it's such a small market. It's tiny. The gold market is much more robust and liquid now. The reason that gold is going down severely is obviously the price of the value of the dollar compared to other currencies is becoming very noticeable. The reason is that the Federal Reserve has hiked interest rates, which other developed nations have not done. Japan has not done it. Germany has not done it. France has not done it. And so for sovereign wealth, for trillions of dollars that need to get parked in short-term treasuries, they all flock to the US dollar now. So there's a demand for dollars at the same time as the Fed is tightening. So this is why this is different than 2004-2006 era, where the Fed hiked interest rates. We saw much more faith in the economy. We saw higher inflation, and therefore gold outperformed stocks. And at the same time, there was no tightening, so there was no shortage of dollars. In other words, what's creating a situation now that is different and making the dollar at 52-week highs is the fact that they're tightening. So they're closing down the supply of dollars little by little, but we're talking billions of dollars. So it moves the price of gold for a few dollars down every day. But as a trader, not as a long-term investor, a lot of traders say, okay, so I don't need to be in gold right now, and they just sell off their gold trading positions, not the long-term holders. You're not talking about private investors who are selling their bullion back to the dealers in droves. This is not what's going on right now. It's more of the ETFs, the paper gold market that's fluctuating a lot. So it's important to remember that. And then, Joe, the main thing to remember is why you own physical gold. And if you're not trading or hedging physical gold, if you're buying it in order to just increase the amount of physical gold that you have, the ounces that you own as an individual, then there's nothing wrong with what's going on. So it's even good, right? You can buy more ounces for the same amount of dollars. I've said it on many other shows, but just so people understand where I come with this, I basically took my lifestyle burn rate, my cash burn rate monthly, and I multiplied it by 24. So 2 years worth of cash burn rate in fiat income, and I just converted that into gold and silver. 80% gold, 20% silver, and that is my entire physical position for the metals. They're stored in a number of vaults worldwide, and that's it. There's no other agenda here. The only agenda is to have 2 years worth of expenses and my burn rate converted into the metal. So if something happens, I know that I have, enough for my entire family to live on. If there's a huge event, a huge currency shock, which I differ from many other analysts or investors in the reasons that I think that the dollar could suffer a major 20, 30, 40% loss of purchasing power. I don't think it's the normal reason. So a lot of people think it's either the trade wars with China that will do it. It could be cryptocurrencies that will do it, or it could be the national debt that does it. And from my understanding and my analysis into this for over 8 years now, I don't think that these are immediate threats to the dollar. I think that there's another immediate threat to the dollar that the mainstream media and the alternative media are not talking about yet. But obviously, if this plays out, we will hear a lot about it. And the reason is it could be an overnight event that changes the paradigm of the dollar. So, we've talked about this many times. The dollar is a political currency. It derives its value from the faith that other countries have in the U.S. political system, in the U.S. economic system, and the ability of the federal government to raise taxes on its citizenry if they need to, on the corporations if they need to. They can postpone retirement age. They can eliminate some of the entitlements. There are many things that the U.S. government can do in order to make sure that they pay the interest rates on the interest payments on the national debt, even if the national debt was double what it is today. So, and that's why other countries, foreign investors, sovereign wealth, they all invest in treasuries because they have a lot of faith in the U.S. Political system and society as a whole, in the stability of the system in the United States. This is coming into question right now. So, and this is the major thing that nobody talks about. But Joe, there's 12 states out of the union that are thinking along the lines of how can I create a state-issued currency. Now, this is not a new idea at all. In fact, between 1776 and 1863, the first Civil War, there were 8,000 state-issued currencies. So only Lincoln put this to bed and made it illegal to do. Now they're looking for logistically and legislatively, how can they create a loophole where they issue their own currency again, mostly in digital form and backed by state projects. So imagine the federal government is only as good as the states that make it up. So California, Illinois, New York, Florida, these are the major hubs, the major economies in the United States, and they're not Trump lovers, to say the least. They have a lot of different views regarding where the country should go overall. And one of the things they're looking at right now that is serious is how they can create a coin of their own, each state with its own projects. Now, if I'm a big investor, California being the 6th largest economy in the world, that is a major event. If they say we want to do something along the lines of a Cali coin backed by state projects, because California has so much assets that they can back their currency with, whereas the federal government does not. So this is something huge that's happening right now under the surface, and if it becomes big news, it will impact the dollar, it will shift the power structure, And one thing that the government of California, for example, does is he defers from Trump on the China thing. So with regard to the Chinese policy, he likes cooperation with China, which will make Chinese very, very, I would say, very anxious to attack Trump and go directly and work with the government of California, shaking up things even further. This is a huge event and a huge trend. If it becomes real in the next few months, it will become one of the biggest stories of the decade. So this is something Wealth Research Group is going to follow very closely. We already issued one special report about this, but we are going to issue another one at wealthresearchgroup.com/CaliCoin. And it's going to be up in a few days. That is huge. So we have the entire history of how this works, what's happening right now, and how can this play out going forward. And this is, in my opinion, much more immediate than the other threats that most people talk about, because this changes the paradigm behind the US dollar. If other countries believe that the United States is divided politically and socially, it's already domestically, the rich and the poor here are not in the same country. They don't live the same lives anymore. So if socially this becomes real, then other countries will absolutely become terrified of how they manage the holdings of their treasuries, how they manage their foreign holdings in the US dollar, and should they diversify into the individual states.
Wow. So you're kind of watching this now. Do you feel this is it would be a crypto, you think, just because the technology is here now?
It would be from what we know, this is not a speculation. The governor of California is looking into a blockchain technology-based currency where it's backed by real projects. If you look at California, they have a lot of national parks, they have ports, they have a lot of projects that they can back their currency with, but they can also back it with future plans. So in other words, if they're trying to raise money, instead of going to the federal government and begging for a budget, especially in a state that Trump doesn't deal very well with, they can go to outside investors and get things done. They can get water projects done, they can get infrastructure projects done, and investors would love to lend money to the Californian government if the currency is backed. So this is something that is a real breakthrough. We're watching this through official channels and backdoor channels. So it's something that subscribers of the free newsletter will be updated on. And this isn't anywhere. I haven't heard it on mainstream news. I haven't heard it on any alternative media sites, and even a Google search on it did not produce a lot of results. So it came through the time I spent in June in California in the major metropolitan areas, and speaking with the context in the industry and in the political system as well.
Okay, so and again, tell them the site again, / whatever it was.
wealthresearchgroup.com/CaliCoin. You can wait for this for a few days because we're finishing the research, or if you're a subscriber to the free newsletter, this will be the top priority next week for the publications that we do.
Okay, yeah, and I'll just tell everybody, I've had a number of people email me when I've had Lior on, and they said, oh, I signed up, and they're even the free newsletter is it's well worth it. So I don't usually get that when I have people on, where people actually reach out to me and tell me like, oh, that was a really great whatever guy you had on, and their newsletters are awesome and this and that. But I've actually had a few people that say that they really enjoy the newsletter you guys put out. It's really full of information.
Thanks, man. Well, and I think one of the things that makes Wealth Research Group a bit unique is that this is my experience as a full-time investor for 18 years, just sharing exactly verbatim what I'm dealing with, what I'm looking at, and I just share that information. It has become a passion of mine to pay it forward to do what I do, because I think the pie is big enough. We don't need to hoard information. I don't think we need to hoard information in our world anymore. I think the more people know And Barcelona, by the way, the place I'm in, is a beautiful example. This city was poverty-stricken, Joe. It was diseased. Like, people were dying here of plagues 150 years ago because it put a wall around the city. It was a fortified city. The second that they decided to lose the walls and to open themselves up to the commoners in the area and to wealth, they unlocked all of this potential. Being at a great location between France and the entire country of Spain, because they're in the north of Spain, Catalonia, they unlocked so much value. And today, one of the top 3 most beautiful cities I've seen in all my travel to about 42 countries now, and it just shows you that if you open up the wealth and the opportunity, then you get a much more educated society, and I think you get better economies. There's a big difference between large economies like Brazil, the 7th largest economy in the world, the GDP size, but it's controlled by 13 families, more or less, and a corrupt government. And on the flip side, you look at Singapore, or you look at some of these European countries that are prospering and have a real middle class, like Austria or Switzerland. Their citizenry is very well educated. So, huge difference between a prosperous economy and a large economy. Large economy can be very concentrated, and a prosperous economy can have a large middle class and a lot more stability, and long term they can be really one of the best countries to live in. So I think that's part of the passion that is behind Wealth Research Group when I started, and still is.
I was gonna say I hear this sound in the background every great once in a while. I said it's either thunder, a train going by, or there's a bull run taking place.
The underground. Well, I'm in the -1 level right now, and the underground train that is very common in the large European cities that are not built for traffic. They go by
That's what it is.
Right next door, because it's the La Rambla, which is like the major hub here.
I can see a little glass behind you, a window. I'm like, I don't see a bull run. It's probably a train or thunder.
Well, funny enough that they canceled the bull, the Matador shows in Catalonia, in this area of Spain, in 2012, because of animal rights and all that kind of stuff. And Catalonia is actually looking seriously into seceding from Spain in the same way.
I know
that
they gave it a shot, not too long ago, and the guy got arrested and all that stuff. But I guess they're still not done.
Exactly. Huh? Oh well, the spirit is still there, and they're even more upset because they didn't get to vote on it democratically.
Yep.
Sorry.
That's all right. So what else? Any other things you looking at now, or?
So with regards to gold, again, just to wrap this up, if you're an investor that looks at the long-term idea of just owning enough ounces, so if something happens to our fiat monetary system, you have those ounces either in your main residence, in vaults, ideally with dealers that you know personally and you trust them to do the right thing at the right moment. And you just understand that this is like an insurance policy that you put on yourself and on your family. It's one way to put an insurance policy on yourself and your family, a monetary one. Then you're good to go in that regard. If you want silver exposure, I think silver has a unique attribute where it's not considered monetary anymore, and therefore it's trading at this 80-to-1 to 60-to-1 ratio to gold, very abnormally from what it used to do, 16-to-1, 12-to-1, and obviously it used to be the main way to transact. Not so modern anymore, and you can't do it. So people are trying to, and investors are trying to build ways to actually transact with silver or silver-backed cryptocurrencies on the blockchain, and it's something that is being done right now to try and see how they do that. And they're even trying to create a situation where you get a dividend, sort of like how you would get interest rates on your savings, not in today's world, but back in the 90s and the early 2000s, to incentivize people to do that. So there are many things that are going on right now. With silver, it's much more speculative. The market is robust enough so that if you buy it and you need to sell it, there's always a buyer and a seller out there. But obviously, much more universal and acceptable right now is gold and silver. So I just put 80% gold, 20% silver. If you're looking to trade them and you're looking to make the sort of fortunes that are available when bull markets occur in the mining shares, I think this is the wrong moment to get involved right now. We do not know what the immediate future is, and what I've learned in the last 8 years is if there is a bull market in mining shares, then it lasts at least 8 months and up to 2 to 3 years. So even if you miss the initial swing, you haven't missed anything. There's so much time to make a wise decision that it pays a lot more to sit in cash right now or look at other alternatives, other situations. And with 71% of my portfolio, my net worth, I'm always invested in what I call legacy dividend stocks. And you can go to wealthresearchgroup.com/dividend and take a look at exactly what I'm talking about. In fact, if you go to the homepage and look at the top menu, you'll see all of the top research and reports that I've done over the years, like a library, a wealth library, I call it, of 18 years worth of investing. But to kind of get people to understand this, most of the time, the best way and the surest way to become wealthier from passive investments, from part-time investment, for putting money in the stock market, is by sticking with a very tightly knit group of companies that are called dividend raisers. Now, these are companies that are able to raise their dividends after they have done everything possible to grow in other ways. In other words, they have enough profits coming in that they can acquire other companies strategically if they want to. They can pursue reinvestment inside of the company to grow their operations, tap into new markets, etc. They can have enough cash put aside so that if they want to do something in the future, they have a cash hoard, and they can create a buyback program where they shrink the amount of available shares so that every share is obviously worth more now because there's less of it. There's less available shares for the company. You can kind of think of it like a billion-dollar company that has 100 million shares. Each share is worth $10. If the company goes ahead and buys 20% of the shares, it's still a billion-dollar company with 80 million shares, making every share worth $12.5. So they just increased your value of every share by 25%. Obviously, it doesn't work exactly like that, but that is what normally happens. And the brilliance behind it is that if you do that when the shares are trading at a fair value, this is tax-free appreciation because you're not paying anything for this appreciation because the management is actually buying shares with their money and not with your money. If you went ahead and bought more shares, that would be something different. So, and if you have companies that are able to do all four things like this: store cash, build internally, grow internally, buy back shares, and make acquisitions, and still be able to pay out a dividend, which is growing every year, then you have a very, very unique company. There are less than 52 companies that have been able to do that for 25 years or more. So just think, go back to the 80s, think of interest rates, think of the problems we had
that happened. Yeah.
It's insane. So if you're able to find these companies at the right moment, then hallelujah, you're gonna beat the index, you're gonna beat the S&P 500, you're gonna beat the Nasdaq, and you're gonna probably hit the double digits returns every year. Now, just to give people an idea, people pay hedge fund managers 20% of the profits and very high fees in order to get about 12 to 13 to 14% out of the market. If you stick to this kind of niche, you'll get to that on your own. You won't need to pay 20% of this profit, and over about 40 years, that compounds to millions of dollars if you only start with $50,000 or $100,000. So every third Thursday of the month, of even months, so on the third Thursday of August, I personally share in the newsletter the companies that I'm buying. And this is going on every third Thursday of even month. So August, October, December, February, and so on, which is a new feature for the subscribers, because I think this is very important to build that core of the wealth, because cryptocurrencies, precious metals, cannabis, blockchain, all these sexy hyper-growth stocks and sectors are critical for game-changer events. But if you don't have the core of your portfolio in the surest way to wealth, which is compounding over the years, then every little swing in volatility makes you so doubtful, and it impacts you financially in such a way that you can't think straight and you're out of the game, and you don't want that. So that's why I think it's so important. So definitely, if you have time to research dividends and compounding, do that. We arranged this so easily in the library. If you go to wealthresearchtube.com/dividends, or just look at the top menu and pick and choose between them for some weekend reading.
Okay, so one final question, I guess. Are you bullish on the not too distant future Bitcoin, cryptos?
I have a price target on Bitcoin of about 36,000. Very bullish. I think that people do not understand completely what Bitcoin is, and therefore they think it's a trial stage currency, and it's not. It's in fact the protocol. Now, if you look at the internet, no one has monetized the value of the internet. But if people were able to own shares of the World Wide Web, you're talking about a $5-6 trillion daily transactions that go on the internet. If people were able to lock in some of those fees on a daily basis, the early investors of the World Wide Web, they would be absolutely the richest people on the planet. So if this happens with Bitcoin, and obviously the community, the developers, this entire protocol needs to rise to another level for this to happen. But if this happens over the course of the next 10 to 20 years, people that own a fraction of Bitcoin right now at $6,000 or these peanuts numbers, compared to the potential, if all goes well, then I think these are very opportune times. Obviously, all the people that were there when Bitcoin was mispriced and was transacted for cents or a few dollars, you haven't missed anything. What happened was Bitcoin was mispriced because it was such a niche and people were having fun with it. They mispriced it. But if it was an entrepreneur for the sake of profit, they would have taken Bitcoin public, the initial price would have been above $1,000 or maybe even more. So the fact that it was trading at such low valuations at first is an anomaly in the financial world, because the initial goal wasn't profit. And so he didn't think like an entrepreneur. He didn't think, hey, what is this worth truly? And so he just wanted people to kind of use it, right? And so that's one thing. So I think people need to wrap this in mind. Don't think, hey, this was 1 cent at one point, because that's not the right way to do it. You should really think of what it is worth if everything goes well, and what is the risk of everything going bad. Now, Wall Street, you're talking major players are going into Bitcoin right now. They're going to do it either through the ETFs or the future markets. There are going to be major changes in the coming months, especially as we approach March 2019, whereas it's the final day for the SEC and all these other organizations, governmental organizations, to start introduce ETFs and futures. Now, what has deterred any institutional money from coming into Bitcoin thus far is the fact that there is no custodian services. Now, let me explain this real quick. Institutions cannot open a Coinbase account and buy Bitcoin on behalf of their customers. It's illegal. So they need a third-party service to keep the assets for them. It's called a custodian. In the stock market, very recognized industry, very known. All the institutions use a custodian services. There is no custodian service right now in the cryptocurrency world. One of the major ones for the stock market has just issued for approval to become a custodian for cryptocurrencies. When this happens, the rest of the competition will come in. This will become a very robust economy for institutions to buy. And I wouldn't be surprised if even central banks start buying cryptocurrencies at that point. Obviously, certain cryptocurrencies that have more robust industries, but definitely the first two, Bitcoin and Ethereum, are going to do very well from this. The rest of the cryptocurrency economy is so diverse. We're talking, some of them are aiming to be actually currencies or used as mediums of exchange. Other ones are simply acting as companies, but instead of going public in the regular markets, they went public in the crypto market. So
whatever,
so when the ICO market gets regulated as well, you're going to see a lot of opportunities start there. Remember though, when you're looking at a cryptocurrency, which is actually a project in development, you're actually looking at a very risky tech project. So you need to realize that 95% of those fail, either because of competition or internal problems with the management, just like growing any other
We've seen a few
business.
of those. Yep.
Exactly. So, and that is why you need to really have a core portfolio, core holdings, and even if you can, have money outside the stock market. One of the ways to do that is obviously to invest in real estate. Many people assume that real estate is only for people with money. And from 2009 to 2013, I built a real estate business in 5 metropolitan areas in the United States, which only focus on no money down opportunities. So that is something that we focus a lot on Wealth Research Group. I even wrote my entire layout, my entire strategy that I used for those 5 years at wealthresearchgroup.com/real estate. Or you can email us at the Contact Us page and we'll send you the special report. That is actually how I built the post-2008 fortune for myself using real estate, and then transitioned more into the holy trinity, as I call them: cannabis, blockchain, cryptocurrencies, in one word, and precious metals. So a very unique background that was also outside the stock market and inside the stock market. I didn't go into the stock market by choice. It happened to me when I was 16. My dad went bankrupt when I was 13. I remember sometimes blackouts in the house because no electricity bill was paid, or the phones didn't work for a few days. And I started working age 13 and saved up babysitter money and painting decks and delivering pizzas and all that kind of stuff. And by age 16, I got a waiver. My parents signed a waiver so I can buy, as a minor, stocks. It was 2 months after the dot-com bubble burst. Ideal. Obviously, I didn't know. Sure. Hey, I'm getting Lucky. It at a very But and the guy that I was kind of communicating with, he got me to look at China in 2000. So another great timing. And that is what helped me propel into commodities and everything that helped us the super growth of China back when I was only 16. So it was a unique journey for me in investing for 18 years now, and I've done many things between private placements and private opportunities, public companies, obviously real estate, and some stuff that is not neither. So fixed income. I love the idea of getting income that is either fixed or high yield. And I'll give you an example. Many people don't want to trouble themselves with buying one property or two properties. If they say, if I don't buy 10 or 20 apartments, this is too much hassle for one property. And sometimes they're right. So there's another niche called REITs, Real Estate Investment Trust, which are public companies that invest in very unique sort of real estate that you and I cannot. So for example, they invest in hospitals or homes for the elderly, right? You think of the hassle of raising money to buy a hospital yourself, right? With friends or family, it's impossible. But you can do it through one click with a REIT, and REITs usually, historically, have outperformed stocks and any other asset class during time of raising interest rates, because what they do is work on leverage. So in times of high interest rates, they do not lend, and they're able to dish out very generous dividends. We're talking 8 to 12 to 14% sometimes, because they're highly leveraged. But compared to bonds, which pay 3, 4, 5%, it's a whole nother world, right? So it's a very unique strategy as well, and that's something that retirees or people that have a high income orientation with their portfolio can take a look at in a very strategic way.
Okay. Well, cool. Is there anything else you wanted to discuss, or is that about it covered?
Well, it's up to you, Joe. But if you want me to talk about another area that is very interesting right now in terms of how the economy is and how the stock market is behaving, I'm more than happy to share with you where I think the market, overall markets, the NASDAQ, the Dow, and the S&P 500 will start to peak, and why this will be the absolute best time to look into the commodities sector. So right now, Wealth Research Group does not see a peak anytime soon. We think that interest rates are not high enough to justify moving into bonds. The 10-year Treasury bond pays about 3% right now, and the CPI numbers, the inflation rate, is about 2.9%. So for investors who have the ability to still buy stocks, I know people say that stocks are trading at ultra expensive valuations, but it's not that true. You need to really calculate that towards where the interest rates are. So ideally, if you look at risk-adjusted and interest rate-adjusted stock valuations, we're at about fair value right now, and not ultra-expensive value. There are many companies that are absolutely brand names, Joe, and they can still create in the next 5 years over 10% returns annually. So if you have a lot of companies like that, 20, 30, 40 stocks that are able to do that, that is why the Dow Jones, the S&P 500, and NASDAQ are able to still lock additional 30 to 40% before they peak. Because investors will not move into treasuries unless they see that the risk-adjusted returns that they can get from stocks are not that good. So with the NASDAQ, we actually see it hitting 10,000 points. It's right now just below 8,000 points. With the S&P 500, we see it hitting 4,000 to 4,500 points. Right now at about 2,800, and the Dow Jones could really peak above 30,000 points. Right now about 24,000, 25,000 points that we're doing this interview. So all these large indices have a lot more room to go. This is part of the reasons that people do not want to touch, or traders do not want to touch precious metals, because they yield nothing, right? They have no dividends and they have no cash flow. So the correlation between the general equities market and precious metals mining stocks is inverse. Once they peak, and with 20 to 30% upside from here, it can take a year to a year and a half. You still have a lot of time where mining stocks could be in a bear market, and the general equities will still go up. We see the 2-year to 10-year spread between what you get with short-term treasuries and the 10-year treasuries, when they will equate, which is we believe in 3 to 4 interest rate hikes by the Fed. So in about a year, that will be when you want to take a look at, this is a problem, this is a recessionary signal and a stock market peak signal. So we still think that there's another year. We can be talking August 2019 and the market still hasn't peaked. So this is something that people need to understand and keep in mind. I know that a lot of gold bugs thinks that, hey, the world should fall down today, right? because of what's happening, but it just doesn't work that way. There's so many moving parts that things just do not happen instantaneously. So that's kind of where I want people to realize where we're coming from and how to view the markets in light of what's going on with interest rates. Okay.
Cool. Well, everybody, I hope you liked what he had to say. Again, give out your site one more time.
Wealthresearchgroup.com is the homepage. You can obviously subscribe to the newsletters, the free newsletter there. If you want to take a look at my own personal asset allocation model, you should go to wealthresearchgroup.com/portfolio. If you're a precious metals investor and you want the most detailed manual on gold stock, silver stock, and just in general precious metals investment, you can go to a special page that we created. It's called wealthresearchgroup.com/gold playbook. I know I give out a lot of URLs, but I like to be specific and just give specific ones to specific audiences. We did create our top 5 altcoins for 2018, and you can go to wealthresearchgroup.com/top and the number 5 and download that. By the way, when you download any of these, in the email that you get, in the automated email with the links, at the drop, if you drop down, if you scroll down, you'll see all of the other ones as well. So instead of downloading everything, you can download one time and get all of them.
Got it. All right, my friend. Well, I hope you enjoy yourself over there, and I guess until next time, we'll see what the markets are at and what you have to say as we move forward. So, thanks for coming
Joe,
on.
It was a pleasure. Thank you for letting me share my thoughts and opinions with people that are looking to escape what basically what the United States government and multinational companies have put upon them, which is the extermination of the middle class in America.
Yep. So, all right. Take care.
Thank you, Joe. Take care.
See ya.